Hi friends, this is Martin from Hedging, the channel for learning about trading and investing. Welcome to Markets Next Day. The stock market analysis where we quickly go through the technical charts and then try to understand what happened in the market during the day and also plan for a better trade for the upcoming day. That's Feb 8th, Thursday, 2024. So we have an RBI policy outcome that comes tomorrow by 10 o'clock, 12 o'clock, that time frame, and we have a very flattish close that happened on both indices today, but it was volatile during the day. This is a wrap up that we have, but we'll analyze that in the charts straight away. Let's see the plain simple charts first, and then see what can we derive out of. So this is the Nifty that you're seeing. You can clearly see that there are two things. One is it is a bull trap because it went above the previous candle's high, trapped the bulls, and then came further down. And it's not it's not fully a bull trap, because a bull trap would come in if it closes below the previous candle's close, which did not happen. Just managed to close 1 point away, so it's almost a bull trap. It trapped the bulls because it went as high as 22,051 and then reverse, and all the bulls who betted on it going to hit all-time high got in a soup. So that's what happened today. So but otherwise it looks mostly like a hammer. A hammer at the top of the rally is not that great. If the price conforms and tomorrow it goes below that candle's low, then we may have trouble indicate short-term bearishness if it works out. It's not a full exact hammer. Hammer would have a little more lesser body, and the wick size will be a little more bigger one. So it's not the case, but definitely a flattish close and a bull trap, almost a bull trap, we can say. It's even more evident flattish close on the Banknifty, which has got a doji. This is the candle consolidation seen with last 3 days, absolute consolidation, and price is not able to move above the 20 exponential moving average. But in the case of Nifty, it is heading high every day, closing higher and higher, except in between some profit bookings, and it maintains the level above the 20 exponential moving average since last several days. Now if you look at the trendline channel, it's done a very short 4.5% of retracement after a big rally that extends from here in the March of 2020, or a lower swing which begins from 26th October, right? So from there we see it's 30% more, 31% of rally, and 4.5 is not a correction at all. Very small one. Banknifty, on the other hand, had corrected more than expected after 26% rally from mid-20 from the October lows. It did retrace 8.5%. It's more than decent. It in fact breached the 200 moving average also. So it lost the channel where it was heading, where it made the swing highs, and it breached that, and it took support at 200 moving average nearby zones, and then reversed, and right now it's consolidating at the very bottom of the blue channel, and any breach of that, and once again it could retest the 200 moving average or even go further below, down towards the 43,300 levels of the yellow channel's low. Right now it seems to be it's at the support zone, and it has been failing since last several days to close above this 20 exponential moving average. And once it clears that and then comes out of this rectangular box consolidation above the 47,300 levels, then we have potential for a next leg of big rally or breakout of the all-time highs and all that towards the top of the trendline channel on the Banknifty, and same will reflect on the Nifty as well. So if we look at the support resistance levels, the first major resistance will be 22k to close above that basically, and then the all-time high of 127, and then 22, 200, 300, 400, up to, it can at least go till 22, 500, considering the length of this flat pattern. If that breaks out and works out, it could go for a little above the 22,500, 600 levels. So downside, if you see, the first support could come in at 21,670, which is called 20 exponential moving average, and then 50 exponential moving average is coming at 21,280. We have Fibonacci retracement level that's coming at 22,350, just above that, and then you have the gap support 2950 and 21,000 rounding numbers. So that's where the supports are the downside on the Nifty. Banknifty basically just to come out of this 27,250 zone to win the rally. But before that, it has to take out the nearby hurdle of 20 exponential moving average and close below that. So let's see, 46, 140, 150 were the major resistance at 46. 200 also, where the 20 and 50 exponential moving averages are coming. So that's going to be the first hurdle. 46k would be a hurdle again, the surrounding number. 46k, then 46,200, and then the Fibonacci 47,000 rounding number. Before that, we have 46,500 also. So resistance in the upside. Downside, the 100 exponential moving average would come in at somewhere at 650, 45,650, and then 200 exponential moving average at 44,650. Then you have 45,000 supports in between that comes in, and also you have a 45,350 support that comes in between, and the 50 Fibonacci retracement levels. So that's the support resistance on the Banknifty. Let's just quickly wrap it up. Yeah, flat positive close on Nifty and Banknifty. Absolute flat, just 1 point up. Managed to close above the 21,900 still. It is a bull trap, red hammer almost. We already discussed that. And in this doji candle, which is flat positive, but 128 points up on the Banknifty 0.28. What I lost yesterday, Banknifty seems to have regained today. The flat is close. Indecisiveness is there. Flat is small body always. It says there is indecisiveness. Market is paused before the event basically. But the weakness can be evident on Banknifty with a being unable to close about the 20 and the 50 exponential moving average, having done a major correction, a decent correction after a 26% rally in the Banknifty. So that's what to keep in mind. Intraday pricing action was more or less volatile. V-shaped moves happened. There was a bull trap initially, where price moved above the gap up and then reversed from there, and then another reversal towards the upside. Right, half V or V-shaped reversal, volatile moves, and finally ending up closing flattish. So Fyers returned buyers in the last 3 days, not 31 days, just 3 days. They were selling for several weeks up to 40,000 crore in the cash market and all that. US also seems to be a seller, so that's a good thing that Fyers are at least not selling today. Also, that might be the same situation. It's just a pause before, so whatever has to happen will happen tomorrow. It's an weekly expiry day also tomorrow. So resistance support levels we already discussed. I'm not repeating that. The RSI momentum is sideways on both indices, and it's rising up in Banknifty and Nifty also. Right, momentum is picking up, but it's not bullish yet. It's sideways and rising up. Trend is closed over, just crisscrossing actually. Closed over the bull zones actually with weak strength. Pricing strength is seen on the Nifty, but in Banknifty it's very much evident weak strength. So, but it can say the trend is on the short term or the daily charts is just closed out with bull zones. You can say it's kind of flattish, not moving further high, but it's above the low volatility regime. It's outside, trying to get to the high volatility regime towards the 20. That's where you have to be very cautious if it's moving to that. 15.5 is the close today. If tomorrow is an event day, expiry day, and all that, so outcomes could be could make the market very volatile, and then big moves could come in here. Be cautious about that fact. Bollinger Bands are indicating some divergent things in the indices. Slight expansion on the downside of the Banknifty, slight expansion on the upside on the Nifty with the bullish buy. So Nifty is expected to move further up. Potentially Banknifty is expected to move further down. That's what Bollinger Bands are indicating the short term. That could change, but let's see. So yesterday also this divergence was there. Today it has become more evident. So technically the charts, we're seeing that it's sideways Nifty and Banknifty. Right? So that's what you have to keep in mind. Remember, the correction is deeper in the case of Banknifty. So coming back also may be sharper. right? So gotta be careful about that fact as well. Also, 8.5 is not a big correction as such. If the market has to crash, it can crash 20% up to that, easily. In Nifty, even more than that. So obviously, you have to be careful. The VIX is rising up towards the 20 lines. Anything could happen. But technically, bank index is weak from all the different indicator study that we have done so far. So Nifty has to have the bank's support, otherwise it cannot move by itself alone, beyond a certain point, and it has already done that. But the problem is there is a double top that is seen on Nifty, right? Like price M pattern. The price is having a congestion at the 22,000 nearby zones. So that's potential for a big down move that could happen from there. But I'll be cautious about that factor actually, given the fact that the banks are not very supporting. If you look at the major indices, they all closed green today, except the IT, information technology. All the sectors are bullish as of now, except the FMCG. So across the sector, there is no sell-off. It's still bullish on the short term. Something you have to keep in mind. Across the sector, bullishness prevails in spite of the fact that the market is volatile. Banks are not doing great. So when we talk across the major sectors, we are excluding the Banknifty, right? And the heavyweights, if you see today, that's what the Fyers are selling basically, right? That's the zone. The heavyweight stocks are considered maximum to the indices. They are closed red today, except for the Reliance Kodak and ITC, which managed to close green out after the result outcome or something. Reliance, Infy, and the ITC, they're the three stocks that maintain the bullish momentum in the heavyweights. Those are all sideways. And also keep in mind, we have big players, HDFC Bank and the ITC, which is in the short term bear zones as well as the momentum short term concern. Keep that in mind. It's a mixed bag all there if you look at the heavyweights. User indices are showing consolidation, some green, some red, mixed bag. If you consider the Dow Jones, Nasdaq, and S&P 500 indices, the mother market. So there will be some consolidation. There will be some, I don't know, it's an all-time high since it's rallying since quite some time, since we have been rallying. So we have to keep a close watch on that. Global index is falling, and it's falling one day and then rising another day, so it's a fall. But rupee remains to be very weak and managed by the RBI at the 83 kind of zones. Crude oil is again spiking up at the bottom. It's at 73. It was attempting to further move up because of the Red Sea crisis in Norway, but it's not breaking out of the trend line channel where it is confined since long. Also, gold is also trying to fall, but not too much from the all-time highs. It's consolidating at the top, just like gold is consolidating at the bottom. So every time if there is a dip coming, that's an opportunity as an investor to invest in good quality stocks, right? In the SIP model for the long term. But as a trader, what matters is the momentum and the trend. The momentum and the trend is actually sideways mostly, and the assets will have to apply the strategies accordingly. Keep that in mind. Don't go for option buying when there is a sideways market, right? It doesn't work. No, you will burn out because of the decay, and this same decay would come in as help for you when you're selling when the market is sideways. But you will consider both the time frames as well. So tomorrow, as I said earlier, the RBI interest rate decision will come in, and there could be big volatility if there is major decision, but sometimes it could be absolutely non-event also if there is no change in interest rates and all that. It depends on how the market will take. It's a fundamental thing. So technically, stay out of the market until the event is just digested of the market, unless you're an expert. But it's a weekly expiry. We tend to take positions in the morning itself before the event, but then you have to make a note of these open risk levels. For the highest put rating is seen at 21,900 and 22,000, hardly 100 points. So very tight, narrow range. So the option riders or the put riders, call riders are seeing that market could be flattish, but short covering rallies could come in if there is big outcome. Okay, sure, dovish whatever way. But otherwise, PCR is not bullish enough, not bearish either. It's 0.86. We just why I had a long build up today because Nifty did well. So closer to the bullishness you can say Nifty, but the option writing does not give any clues. It says that it will be flattish, mostly in a very tight range. That's all I have. If you're watching this and not subscribed, please subscribe and share difference in clicks, and so that it reaches out to everyone. If you put in your feedbacks, comments, and all that, it helps a lot. And share difference. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.